Good morning, everybody. Welcome to today's Bite of Wisdom. Today, we're going to be doing a quick run-through lesson on candlestick basics. So for those of you that have never had experience reading a price chart before in, thoroughness, today will just be a basic general overview of what the heck you're looking at when you look at a price chart. For those of you that have plenty of experience looking at candlesticks, then I'll just dive a little bit into candlestick patterns. And is knowing all the candlestick patterns important? Or if it is, how important is it? All right, let's get going. So candlesticks, yes, we need them for trading. In this group, we don't so much focus on fundamental analysis. We focus more on what we call technical analysis. And that means reading the candlesticks on a price chart to give us information for trend. What is the sentiment of the market, right? Is it bullish or bearish? And so today, let's ask ourselves the question, what signs or signals do you use to discern the sentiment of the financial markets? Whatever signs or signals you use should be part of your strategy and in your trade plan. It should be written out. If the market does this, and that, then I'm going to take action and execute, whether to buy or sell, to enter or exit positions. But it should be done based upon price charts, right? So basic candlesticks. A candlestick gives you four main data points, which would be the high, the low, the open, and the close. And this refers to prices traded. Okay, this is the highest price that an order was filled, whether it's stocks, crypto, futures, whatever, right? Options, doesn't matter. The highest price that an order was filled, and this could represent any interval of time. It could be a 5-minute chart, so this could represent 5 minutes of time, or a daily or weekly chart representing a larger amount of time. Regardless, this would be the highest price an order was filled, the lowest price an order was filled. The open is the first price that an order is filled in this time interval, and the close would be the last price that an order was filled. So if the close ends up being higher than the open, then the candlestick, this is called the body, is green. The body represents the difference between the open and the close. Open and the close. These are typically called wicks. Some people will call these shadows or tails, which would be the wicks on the bottom of the body. But, there's different lingo and verbiage out there. Don't get too hung up on it. Create your own verbiage if you want. And over here on a bearish candle, this just means that the close ends up being lower than where it first opened. And so if it closed lower than where it opened, the body would be red, considered a bearish candle if the close is, on the lower third of the range of the candle. And this would be a bullish candle if the close is relatively on the higher, let's just say roughly 1/3, the higher portion of the candle in its entirety. There's many different types of patterns. If you put one or more candlesticks together, this is called a bullish harami. Think of a pregnant lady. If a pregnant lady, what is she going to give birth to? What's in the belly? Well, it's a bullish candle. So this indicates that the market should go up. And a bearish harami, again, a pregnant lady, what is she going to give birth to? Well, a bearish candle because it's red. Here's the close, and price should be going down. This is an engulfing. And engulfing, this candle engulfs completely the range of the prior candle, and it's all red, and it closes low. It's a bearish candle. So this would indicate the market continuing to go down. And here's a bullish engulfing, where you have a bullish candle completely engulfing the range of the prior candle, and this should indicate going up. Over here is a hammer, right? Looks like a hammer. So the hammer indicates bullish pressure, where the market closed very high up on its range, regardless if it's red or green. This indicates the market should go up. And here we have, looks like an inverse hammer or a shooting star. This is a bearish candlestick pattern, indicating the market should go down. Look at all that selling pressure, pushing price to close very low on its range. Now, this is just a tiny little speck of candlesticks patterns, okay? But look, I spy something. What do you spy? Here's a current Apple chart, the stock Apple. Do you see any of those things we just saw? What is that? Wow, that's a hammer candle. That's a bullish hammer. Even though it's red, it's still closed high on its range, which indicates very high buying pressure, which made the price go up. What do we have right here? What does that look like? Oh, that looks like that inverse hammer, the opposite of that, doesn't it? Shooting star. Now, I don't know. Am I automatically going to assume that Apple is going to go down just because this is a bearish candlestick pattern right here? Well, maybe, maybe not. Now, I don't use these personally just to decide to buy or sell, right? Because if I did, good Lord, look at all the different candlestick patterns. There's so many of them. When I first started trading, I made it my point to memorize as many as I could. And that just clogged up my brain and prevented me from really good, solid, easy, simple trading, right? So if I go back to that last slide, if you have a hammer candle, make sure it's in an area where there's a good indication that price is going to go up anyway. See that? See that breakout of the high? This is an indication where price could go long, or you could go long in a trade anyway. And a hammer candle is a type of a confirmation. Same thing. I would need to look to the left to see if Apple has any selling pressure prior at this same price point. If it's all-time highs, well, then you're kind of taking a gamble going short right here on all-time highs, right? So at the end of the day, what kind of signs and signals do you need to go into the markets and to buy or sell? Be careful looking for too many signs, looking for too many patterns. It can often cause confusion. At the end of the day, look at the big picture, folks. What is the trend? What is the daily? What is the weekly trend? Okay, where are some high time frame levels, weekly, monthly? Look at the broad markets, look for correlation. Always zoom out and look at the big picture, or we'll just kind of get chopped up in our trading, right? It can happen very easily. Well, the Lord wants us to kind of look at the big picture always. He doesn't want us to get too zoomed in on little signs and signals on every little thing, confusing us, right? There's a verse in the Bible, Matthew 16, where the Pharisees and Sadducees came up and, putting Jesus to the test, they asked him to show them a sign from heaven. But he replied to them, when it is evening, you say it will be fair weather, for the sky is red. And in the morning, there will be a storm today, for the sky is red and threatening. You know how to discern the appearance of the sky, but are you unable to discern the signs of the times? An evil and adulterous generation wants a sign, and so a sign will not be given to it except the sign of Jonah. And he left them and went away. Woo. Well, what's the sign of Jonah? Well, remember, guys, the context of this is Jesus got done showing so many miracles. He did things only the Jewish tradition elders would say the Messiah would do. He delivered demons from people, demons that made the people dumb and blind and couldn't talk. And the Jewish elders said only the Messiah could do these things. He did so many miracles already, but they refused to believe. And they had the nerve to ask him for more signs after they said, hey, all these miracles you're doing is in the spirit of the devil. That was the unpardonable sin, doing that in person right in front of Jesus right there. So they had the nerve to keep wanting more signs and signals, but they cannot see the big picture, the bigger truth. But again, what's the sign of Jonah, you ask? Well, a couple chapters before that, Jesus says, for this, the sign of Jonah is this: for just as Jonah was 3 days and 3 nights in the belly of the sea monster, or the whale, or whatever you want to call it, so will the Son of Man be 3 days and 3 nights in the heart of the earth. Was Jesus physically alive? No, he was dead in the heart of the earth when he was crucified and buried, right? And so was Jonah. People don't often teach that, but that is my belief based upon the scriptures. So just as Jonah was raised from the dead, Christ was also raised from the dead, and that was the sign. So be careful looking at too zoomed in on the charts, folks. Always zoom out and look at the big picture and the big context of the market and the context of life. So what signs or signals do you use to discern the sentiment of the financial markets? Test them, prove it to yourself, and use it daily with your rules. All right, that's the Bite of Wisdom for today. Thanks for joining me, and I'll check you guys out tomorrow. Peace out.